Student accommodation investment. A booming sector in the UK. Let's get one thing straight. Student accommodation in the UK? It's not just a trend. It's a full-on investment beast. And if you haven't clocked on to that yet, well, I remember showing a small HMO in Leeds to a client back in 2019. Nothing fancy, just your standard 4-bed terrace. Needed a new kitchen? Maybe a lick of paint? They passed on it. Too niche, they said. That same property flipped into purpose-built student digs 2 years later, generating over £2,100 a month in rent. Yeah, ouch. So why is this sector booming? First, universities aren't slowing down. Despite the economic roller coaster, UK higher education continues to attract students from everywhere. According to the latest UCAS data, international applications are up again. More bums on seats equals more heads needing beds. Now, here's the kicker. Traditional student housing, like tired Victorian terraces, is falling short. Students want Wi-Fi that doesn't glitch during a Netflix binge. Ensuite bathrooms, because who wants to queue in a dressing gown at 8 a.m.? And communal spaces that scream, Instagram this. Enter purpose-built student accommodation, PBSA. These sleek modern blocks have become catnip for investors. Think gym rooms, study pods, rooftop gardens. Some even have 24/7 concierge. It's like a hotel, but for studying. But here's what gets really juicy for investors. Consistent demand. Students roll in every September like clockwork. Long-term stability. Unlike short-term lets, student tenancies are usually 12 months. Rental yields? Wild. In areas like Nottingham, Manchester, and Sheffield, it's not unusual to hit 7 to 9% gross yields. Hands-off options. Many PBSA projects are fully managed, meaning no 2 a.m. phone calls about lost keys or broken boilers. One of my clients recently bought a unit in a Birmingham development, close to Aston Uni, paid around $79K. He tells me he's pulling in a net yield of 8.2%. He doesn't even live in the UK. It's fully managed. He hasn't seen the property since completion. I mean, that's passive income goals. But before you go sprinting to Zoopla, let me toss in a cautionary tale. Remember that property boom in 2006? Everyone and their dog was flipping flats in Spain. Student accommodation has a bit of that glint right now. Meaning, do your homework. Location is everything. I wouldn't touch a block in a town with a single struggling uni. But in Durham or Bristol, prime. A friend of mine, fellow agent, tried investing in a student property in a town where the uni had been cutting back on courses. Took ages to fill. Ended up converting the unit into short-term housing just to cover costs. Moral of the story, not all uni towns are created equal. Also, keep an eye on supply. Some developers have gone full tilt, throwing up tower blocks faster than you can say double espresso. Too much supply equals rent drops equals sad investor face. Oh, and if you're considering a HMO conversion, brace yourself for planning hurdles. Local councils are tightening Article 4 restrictions in loads of areas. That means no more, I'll just turn my terrace into a 6-bed student house without planning permission. So what's the play? Target top-tier uni cities. Think Russell Group. Check local demand stats. Empty rooms, zero ROI. Avoid saturated markets. Ask local letting agents. We know. Look for USP features. Fast Wi-Fi, ensuite study spaces. Go managed if you're hands-off, especially if you live far away. Honestly, I've started recommending student investments to a lot more of my clients recently, especially younger buyers looking for a low-entry option into the market. It's not foolproof, what is? But in the right place, with the right setup, it's gold. Got questions about where to start? Drop a comment or message me. I'll tell you what's hot and what's heading for a crash. Because let's face it, nobody wants to be the guy who passed on student digs in 2025 and watched their mate retire early off the back of them.